Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP, as well as the vast majority of crypto. So let's just dive in and let's start off with the overall market conditions. So one, we start to see the entire market kind of bounce back, and Bitcoin made up for almost everything that it did lose if we go back to the 1 month span here. So here's the floor model that we were building on back in the beginning of March before we, of course, collapsed. We basically made up all that ground. The question is, are we going to continue to go higher, or what's going to happen here? We also do see USDC basically repegging to almost $1, and altcoins are performing very well. Some of my larger picks, like the Graph, Filecoin, and even SNX, which SNX is a sleeper, by the way. It's a DeFi sleeper. Are doing very well, up double-digit figures, which is incredible to see. Some other altcoins were starting to pump out a little bit, but if you are holding XRP, you're probably hating yourself because it's only up about 0.73%. But that's short-term. Long-term, we have nothing to really worry about. But why is everything pumping like this? Why is everything bouncing back in such a short amount of time? Well, Noelle posted this over on Twitter. I retweeted it if you guys do want to go check it out. Not a lot of views or anything like that on this post, which I do think she deserves a lot more. But we do see, with a possible rescue of SVB on the table, the question now is, will the Fed slow down on rate hikes while it calibrates the damage to trust in the banking system? Bitcoin seems to think so, a thread on how all of this can impact crypto. With just 10 days to go until the next FOMC meeting, which if you guys did want to go and check this out, March 21st to the 22nd, which, by the way, this is the more important date than January and February, aka January 31st to February 1st. This one includes the meeting associated with summary of economic projections. So this is going to give us a lot more insights on what really is happening. Obviously, a lot of this data that we do see from the Fed is, it's kind of fake. There's a lot of things that they're bullshitting, especially for the retail sector to feel calm, collective, and safe, which, if you guys have been paying attention, we all know that we're not. But yeah, I think that these events are definitely ones to watch for, especially if you are in this market, you have exposure to this market, you are investing your money and things like that. So definitely listen in on March 21st to the 22nd. But we do see that Powell is between a rock and a hard place. There are many signs inflation could come in strong on Tuesday, yet the banking system is under strain, and a sharp hike could trigger even stronger bank deposit outflows. Treasury yields are down sharply since the middle of last week, but CME futures pricing has decisively swung back to predicting 50 BPS hike on the 22nd. Then again, they've been swinging wildly all over the place over the past few days. Not sure their signaling is all that indicative right now. If Powell chooses to stick to 25 BPS or even pause while the Fed watches the dominoes play out, some are insisting he absolutely needs to cut rates tomorrow. I'm not sure the situation is that dire just yet. Then a better liquidity outlook equals good for Bitcoin. And then there's stablecoins. USDC depegged amid concerns regarding Circle's exposure to SVB. Should that get even partially resolved on Monday, the discount should close and Circle's reserve management will be shown to have protected it from more damage, which basically I just told you guys they could almost repeg back to $1. It's about 50 cents away from it. What about DeFi though? Curve's 3 pool got seriously out of whack, but should correct as USDC fears abate, and DeFi will yet again have shown that it can withstand extreme stress. The emphasis on USDC versus USDT may be questioned. So weird that USDT was seen as the safe asset here, which, yes, I did talk about that, how Tether was essentially the safe haven, which most people since 2017 have been talking shit about USDT basically being implosion worthy. But hey, did it implode yet? Not yet, but I wouldn't bet against it. Again, I always am fearful of, what possibly could happen, so we prepare for either scenario. But DeFi continued to work as it was supposed to, unlike CeFi. What do you see down here? We're not out of the woods yet, and tomorrow is likely to be volatile. But things changed last week significantly for markets, the economy, and crypto. Here's hoping SVB customers can get their money back and that the contagion isn't as systemic as some are struggling. Now, I did get tagged in this post, which is why I did retweet it. But a lot of people were telling me like, hey, 87% of the deposits were uninsured. And yeah, if you actually look at SVB and their depositors, 97% of them were over the $250,000 FDIC threshold. So if you look at that, 97% of their customers, clients, companies, etc., that are tied to them will not be bailed out, which is a big concern because you got to question, well, what's the systemic risk? What's the overall contagion effects like if these companies, fall? Also, there's like tens of thousands of employees that are not going to get their paychecks. They're not going to get paid. So you got to think about like what is really the warning signs of this? What's going to happen after the fact? How is the world of finance going to react to this today? Because when markets open today at I think it's 9:30 a.m. EST, we got a question on like what's going to happen. How are stocks going to react to this? What's the retail sector going to do? So it's definitely questionable, right? But I also want to go over this meeting as well. The Fed has a meeting today. This is a closed door meeting. I do 100% believe that they are going to be talking about the collapse of SVB. We are also going to see the discussions around a possible 2008 like repeating event. And we just seen the U.S. Treasury official talking about a 2008 like collapse. For an example, here you guys have that announcement. And it's interesting, right? Because it's not 2008, it's 2023, like we are seeing from the creator of Shiba Inu, or Dogecoin, I mean, sorry. And honestly, when we look at what's happening around this market, like I'm not going to listen to these treasury officials. They are here to try to calm the retail sector down. They're trying to, cause this sort of idea around, hey, you could trust the system. The system is fine. Don't withdraw your money from a bank. Don't save yourself from what's about to come. So that's exactly what we are seeing. And I'm going to talk about a little bit more about this here in a second. But first, I do want to address a few of the big updates that we've seen. So first off, we do see the U.S. says all Silicon Valley Bank depositors will have access to their money on Monday. But it's interesting because we already seen their Twitter and their website get shut down. They're completely gone, which is concerning because I don't believe that this is the truth. I don't think that we are going to see these depositors made whole. I want to see how it plays out today. I think everyone should be prepared for volatile price action to happen. I think that everyone should be prepared for the worst. That way, if we do get, incredible price action, whatever the case may be, then that's great. But I think that we should prepare, for either scenario, good or bad. Right now, the market is doing very well. I'm very happy about this. But we got to understand that one, are we in the green yet? Are we in, the support zone yet? Are we building support? Is the floor being built out? It's not, right? We just recently pumped these prices. The price action was a little bit interesting to see, but we are going to see a lot of updates this week. We are also going to see the, FOMC meeting coming near the end of the month. There's a lot more that we need to withstand. And also for those XRP holders out there, I've seen a lot of people concerned about Ripple's exposure to SVB, which we do see. Ripple CEO confirms the company had an undisclosed amount of cash in Silicon Valley Bank. We did see we've seen Brad Garlinghouse actually talk about this. We do see Ripple had some exposure to SVB. It was a banking partner and held some of our cash balance. Fortunately, we expect no disruption to our day-to-day business and already held a majority of our USD with a broader network of bank partners. So there wasn't really much of a concern here with Ripple. We definitely need to see a little bit more of an insight on just the disclosed amounts. We don't have that disclosure just yet, but I wouldn't be too concerned about this. It looks like, they prepared for this pretty well. But again, anything is possible. We could still see some negative effects from this. Again, it's Ripple, so it's not XRP. It's not like XRP is exposed or anything like that. I always say like what Ripple does outside of this market without XRP tied to it. And when I say that, I mean more like, hey, they're not exposing on-demand liquidity to SVB, for example. It doesn't really concern XRP if you are an XRP holder. Now, we do see over here as well, another bank closed today. Signature Bank closed today by state authority. And the interesting thing about this is, let's go look at Mad Money, right? So this is how many people watch Mad Money. Now, this is 380,000. This is not talking about we're not talking about just CNBC itself, because remember, there's a lot more events here that Jim Cramer is tied to outside of Mad Money. But Mad Money itself is broadcast to 380,000 nightly viewers. That's 380,000 retail investors. But every single day, Jim Cramer is talking to a ton of investors, retail investors that don't really know much. And they're getting fed complete bullshit. They're being lied to. Everyone is being lied to by the mainstream media. We do so over here. 1 month ago, Jim Cramer urged investors to buy Silicon Valley Bank stock. Today, the bank was closed by California regulators, making it the second largest banking failure in U.S. history. Listen close to this video.
The ninth best performer year to date is SVB Financial. Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year, they could come back. Yeah, some of them come back here, but the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing 2/3 of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce-back moves might be far from over. These stocks could have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping, like we saw.
So, again, this was broadcasted to 380,000 individuals. I'm wondering how many individuals invest their money into SVB stock. But also, right, we are seeing a major announcement around Jim Cramer. We're actually seeing Fox News talking about him. Jim Cramer embarrasses himself with one of the worst stock picks in history. If you'd listened to Jim a month ago and bought SVB Financial, you'd be down over 66%. If that guy ever endorses anything you're doing, move to the Canary Islands. Change your name because disaster's coming. Listen closely.
Here is professional BS artist / dumb person Jim Cramer of CNBC telling his viewers to buy Silicon Valley Bank, even as it was in the process of going under. This is last month.
SVB Financial, don't yawn. This company's a merchant bank with a deposit.
And this was exactly the video that we just listened to. And listen closely.
SVB is great. If that guy ever endorses anything you're doing, move to the Canary Islands. Change your name because disaster's coming. Here is.
And this was not the only major call that Jim Cramer had. Here we have. In 2022, Jim Cramer said, you can make a lot of money with Signature Bank. Today, the bank was shut down by regulators, making it the third largest banking failure in U.S. history. Listen closely.
Let's start with Signature Bank. This is a New York-based commercial bank, but it's got 36 private client offices sprinkled across the New York metro area, California, and North Carolina. The thing about Signature is that it's a business-oriented bank. And to the extent that they have a consumer business, it's focused on the wealthy, namely business owners and senior executives who do a lot of business, and you can make a lot of money working with. Let's start.
And again, let's go back over to 2008. Another flashback. Jim Cramer recommending Bear Stearns 6 days before its collapse.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is really, look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Okay, just so you get a sense of what's causing the agony by this point, I know you've been talking about it. It's financials led by Bear Stearns after what essentially is a bailout from the Fed. Bear Stearns shares are down 90% this morning, and it's not just Bear. Pretty much every single bank is plunging in early trade this morning. Lehman, which is very similar to Bear and its reliance on fixed income, is down nearly 30%. You have big names like Goldman Sachs down 8%, Citigroup down 8%. So it is pain across the board this morning, and as you know, it all emanates from the shock this weekend that J.P. Morgan, along with the Fed, was going to be bailing out Bear Stearns for $2 a share. This is a stock that recently was trading at 80. Last year was trading at 160. It is the fifth biggest bank on Wall Street. It is significant in that it is establishing a price for some of these hard-to-value securities. And as you are well aware, that price is pretty much zero. And that's why you're seeing pain across the street. Now, this.
And I want to take you guys back a little bit to what we recently seen from Jim Cramer. Charts suggest investors should ignore crypto cheerleaders and stick with gold. This was January 23rd. Truly a sham market. Jim Cramer says you need to ignore the crypto cheerleaders now that Bitcoin is bouncing. This is why and what he likes instead. February 21st. Jim Cramer, I would not touch crypto in a million years. December 23rd. This is why you cannot be sheep. Do not follow mainstream media. That's why when we are seeing these officials, these treasury officials saying, hey, the situation is fine. It's fine. Don't pull your money out of the banks. Don't overreact. Everything is fine. Usually, you want to do the opposite. Listen, I can't tell you if another situation like 2008 is on its way, but I will say this. History does not repeat. It rhymes. Remember what I said in my last video on this? I talked about it. I discussed what's happening around the market, right? When we look at what's happening with these banks, when we look at what's happening with, the world of crypto and the world of finance and economics and things like that, mainstream media is feeding us bullshit when we know things are starting to break. And why is it starting to break? Well, take a step back. Look at what the Fed has been doing. Look at what, this country has been doing. I mean, the US dollar itself, when you look at it from a global standpoint, it's being ignored because it's basically useless to some of these countries. They want to get away from the US because we utilized the US dollar as a financial weapon for so long, and we essentially destroyed its value. Any value that had ties to it. But I also want to share with you guys this post here from BlackBerry XRP. CNBC says buy Signature Bank. Kraken says run from Signature Bank. This was posted on the 10th. Look at this. Wells Fargo says buy Signature Bank, the last game in crypto town. Crypto exchange Kraken said to stop using Signature Bank for dollar deposits withdrawals. We are being fed nonsense. I said this is intentional. They don't want you breaking the cycle. They don't want you escaping the endless grind. They want to keep you on the never-ending hamster wheel. I'm telling you right now, pay attention to what mainstream media is telling you and ignore it. Do the complete opposite. I can't believe that Jim Cramer still has a talk show where he talks to 380,000 plus individuals every single night. He needs to be held accountable for his actions. What we've recently seen from his calls is the retail sector being eaten alive financially. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. So it's up to you all. Have a beautiful day, beautiful night, wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.